right, let's take a look at the story that I have for you. SMCI stock is in, quote, a sweet spot, end quote. That comes from Raymond James as they set a $41 price target as AI revenue hits 70%. Okay, let's dive in here real quick. Raymond James has initiated coverage on Supermicro Computer with an outperform rating. This move comes in light of Supermicro's strong standing in the AI optimized infrastructure sector and its swift revenue growth. AI platforms constitute approximately 70% of Supermicro's revenue, positioning it as a dominant player among branded server vendors. A $41 price target on the company, projecting Supermicro's full year 26 revenue at $29.8 billion with an EPS of 303, indicating a compound annual growth of over 25%. That would actually be pretty good. Raymond James highlighted that Supermicro has effectively carved out a niche for itself and, quote, positioned itself in a sweet spot, end quote, between traditional IT-based vendors such as Dell and Hewlett-Packard. I know we've talked about Dell here before. Dell actually, in its recent move down, had quite a great reset of its price to earnings ratio. I think that was actually under 10 for a little bit. That's pretty sweet. And contact manufacturers like Quanta. The firm noted while Supermicro has shown impressive growth, its valuation was impacted by past performance inconsistencies. That's a nice way of saying it. And internal control issues, which caused delays in SEC filings and auditor changes. Never something that you want to see, but it does look like they at least navigated through those, what can we call them, dark times? Cloudy skies, whatever you call them. These problems have since been resolved with no misconduct found. Day trader here saying, yes, the SMCI project that was cut back was a large building for them, and that was quite elaborate. They cut it back to a more modest design. So it looks like that almost feels like kind of a demand drop, right? They had this vision. We're going to need this center to accommodate X amount of demand. Now we're cutting that back, so it seems like demand might be down a little bit as well. Okay. They expanded like crazy here over the last 3 years. Okay. There you go. All right, let me finish up here with this. The firm noted Supermicro. Here we go. CEO Charles Liang said the company isn't providing fiscal 2026 guidance due to tariff-related uncertainty, noting that, quote, economic uncertainty and tariff impacts may have a short-term impact, end quote. Despite these financial setbacks, Raymond James remains optimistic about Supermicro's future, particularly due to its robust position in the AI-optimized infrastructure sector. The firm's bullish stance is further supported by Supermicro's plans to expand its U.S. manufacturing to produce 1,500 liquid-cooled AI racks per month. SMCI stock surged 16.02% to a close of 38.89 on Tuesday. On a year-to-date basis, it has soared over 29%. And as we just took a look on the chart, it actually looks like it might be gearing up for some more upside there. So we shall see.